The race for AI is really fundamentally, in my view, a race to build more energy.
This is Tejas, an investor who started in classic finance, mastered the craft, and then deliberately pivoted toward technology, climate, and real-world impact. And so Tejas is currently a principal at Bloom Equity, but before that, Tejas was a director at Verdun and spent over 4 years at Lazard. These are incredible firms. But Tejas, super happy to have you here. Thank you for joining the show.
Up until even my junior year, I didn't really have an idea for what to do. I decided that every Friday I would take a bus to Houston, meet with as many people in investment banking as I could all day, and then take a bus back. I genuinely believe almost everything you want to do in life is possible through hard work. Unless it breaks the laws of physics, it should be achievable. We're now getting to a point where the only thing limiting more compute capacity, it's not the chips, it's not the memory, it's really the availability of energy.
Is the US going to lose the AI war because we can't master our energy production? Welcome to another episode of Wall Street Diaries. This is a podcast about extraordinary individuals who launched their careers on Wall Street and use that experience as a springboard to build world-class careers. And we bring you the story of the people who turned that foundation into something remarkable. And today I'm sitting down with someone who did just that. This is Tejas, an investor who started in classic finance, mastered the craft, and then deliberately pivoted toward technology, climate, and real-world impact. And so Tejas is currently a principal at Bloom Equity, a tech-focused growth equity firm backing climate-positive and sustainability-driven businesses across Europe and beyond. But before that, Tejas was a director at Verdun, where he invested in high-growth technology companies across Europe. And early in his career, he was an associate in the tech group at Perella Weinberg and spent over 4 years at Lazard. These are incredible firms, top of the top. So Tejas is obviously super, super smart. But he actually started his career in power, energy, and infrastructure, and venture and growth and banking. He split his time between New York and London, so there's a lot to unpack here. And really, really excited to see how underpinning all of that is a rare foundation, which is a bachelor's in civil engineering from the Cockrell School of Engineering and a bachelor's in finance from Texas McCombs. And so it hopefully will help us understand a little bit about how Tejas thinks about systems, capital, and real assets. But there's a lot to peek into here for anyone who's interested in building a career that has an impact in equity, or investing or banking or anything in between. So Tejas, super happy to have you here. Thank you for joining the show.
Thanks for having me on. Awesome to see you again. And yeah, excited to jump right into it.
Yeah. Well, so let's start with chapter number 1, which is talking about this intersection between engineering and finance. And this is something you don't actually see that commonly in investment banking or private equity. And you studied both civil engineering and finance at UT. And so early on, did you see those as two separate paths, or did you already have a sense that they'd converge later in your career?
I would say fairly separate paths. There was not really a formula or logic behind studying the two, except that I was super interested in both. I come from a family of civil engineers who've started businesses, so I've always been super interested in engineering and also the business side of it. So, I went into University of Texas studying civil engineering and found that I had a long-standing passion for the markets and for business and finance, and decided to pursue both majors. So being in these programs, I never really thought that I would converge these two paths. So I've always thought about them as fairly separate, and if I could find ways to combine the two, it would have been awesome, but that was never really the idea or the goal.
Mm-hmm. Yeah. Okay. Interesting. So thought about these as very separate things, then ultimately later on they did converge a little bit. Is that fair?
That's right.
Okay.
Yeah, they did converge quite a bit. Yeah. Mostly, I would say when I was in university, I was super interested in energy. I did some research with some professors on campus, and the more I got to understand energy, broadly, I started to appreciate a bit more the business challenges in energy and how it's really fundamental to so many industries and economies. And the more I started to learn about that, and more I got involved with different research projects, I felt like being in a role that combines both finance and my love for energy from an engineering side would be super cool. I explored a few roles and eventually thought, being in investment banking and working exclusively with energy companies would be a really great start for my career.
Yeah, well, so let's talk about that a little bit more. Obviously, the path engineering to investment banking isn't extraordinarily common. Most people study finance or economics or something like that. And so I want to understand, what was that first spark or that moment where you were like, oh my gosh, this might actually be an interesting career path? Was that early on? Was that somewhere in the middle?
It didn't come up until fairly late in my journey, I would say up until even my junior year, I
Wow.
didn't really have an idea for what to do, and I had friends in both engineering and business schools who had done different things, and I think there it's hard for me to think of one moment when all of that crystallized, but I think it was more so from people, and some of the
Hmm.
people that I met who I really looked up to. Some of the upperclassmen had done internships in investment banking, and speaking to them more about
Hmm.
their roles in energy investment banking was super interesting. It felt like they were getting access to, amazing set of decision makers super early on
Hmm.
in their career, and I felt like that was quite differentiated in business and banking versus
Hmm.
engineering, where I think you have to put in a lot of years before you get to a point where you're either the decision maker or you get to see up close how decisions are made. So that sort of sparked an interest in wanting to try investment banking, and I genuinely treated my summer internship as, let's try it, let's see if I like it. If I like it, great. If I don't, then I'll probably try to stick with engineering, or
Yeah.
maybe try to find a role at an engineering firm.
Yeah, interesting. Okay, so that's fascinating on two fronts because one, it's like you started so late, and then two, it sounds like it was just a very organic process. And
Yeah,
so,
absolutely.
Tejas, the fact that you started internship recruiting in your junior year is actually just like absurd by today's standards. Like, I don't
Yeah,
know if you followed the industry since then, but now it's like we're working with primarily freshmen, some sophomores, even people in high
wow.
school who are preparing for these recruiting cycles in their sophomore year. It's crazy. We're going to launch our preschool program probably pretty soon here. Um, but it's a testament to your hustle and to your intelligence that you were able to like make that happen, even though you were a little bit late to the game. And so I think that's encouraging for a lot of folks just to like see that that's possible, even if these timelines have moved up. And then the second thing that I think is super interesting about what you said is just how organic it was. A lot of times in like why banking, people are forced to come up with this like magical moment where they're like, oh my gosh, I wanted to do investment banking. Like there was this moment and the stars aligned and it just crystallized for me. But like realistically, most of the time, it is just organic. Like there's just
Yeah,
you go to the investment banking club, you talk with a few people, you start to think and you're like, okay, like actually I could see myself doing this. And so that's just so relatable and also
yeah,
just so uncommon in interviews, you know?
yeah. No, I mean,
So
absolutely. I definitely resonate with a lot of that. I did feel a little late to the game, but yeah, like you said, I think just meant that I had to put in a bit of extra effort. But yeah, I think to all the students out there listening, it's definitely doable. It might just mean you have to network a bit more.
mhm.
But yeah, I think if you have a real desire, real passion for breaking into it, I think definitely firms will see that, and your passion can definitely help open doors.
Yeah, totally agree. And so let's tie this back together. So you did the engineering, you ended up at Wall Street. How did that influence things? Like, how did your engineering background shape the way that you approach modeling, diligence, problem solving once you were on Wall Street?
Yeah, I would say it was fairly different in the way that I had to adapt my thinking, or the way I approached some of the problems. Being an engineer, I maybe thought more in code than in Excel, so it probably took a little bit of time. I think there were some benefits to it. Obviously, having a strong analytical skill set and mindset where you're okay with dealing with numbers and large amounts of data is very critical in investment banking. So I felt a lot more comfortable with that. But I would also say, some of my peers had done pre-junior year internships, maybe in their freshman year or sophomore year at, some of the smaller investment banks in Austin. They were just so far ahead of me when it comes to financial modeling or Excel. So I felt like I had to put in a bit more effort to really catch up. But yeah, it wasn't something that wasn't manageable. It just took a little bit more time.
Yeah. And so do you think that that ultimately gave you an edge or a leg up? Because fundamentally, I actually do think that for energy investment banking, it probably is smart to study some sort of engineering.
I thought it was tremendously helpful, to be honest. I think understanding even the simple fundamentals of energy, as a very basic example, knowing what the difference is between a power and energy, and energy is power times time, and being able to understand that you know if you have a certain amount of solar panel capacity or wind capacity, that doesn't actually mean you get that much energy all the time. So some of the basics like that were super helpful. I would say that the team that I was in was also, it was obviously quite intense, but it was also very welcoming to new ideas. So I think having understood energy and some of the basics of it, I thought I could come up with a bit more of an interesting ideas, and contributed to more projects that maybe it might have been slightly harder if I wasn't an engineer. I remember just speaking with an MD about why LNG companies don't use electric powertrains is when
Hmm.
electricity prices are so cheap in Texas, and why do they use gas?
Hmm.
And he actually
Yep.
thought that was a really good question and idea, and the two of us ended up, doing a large scale multi-week project on it that we then
Very cool.
presented to a lot of LNG companies that opened up a lot of dialogue as well. So I think overall it was definitely super helpful. I don't think it's
Hmm.
required by any means, but yeah, it definitely helped me appreciate some of the challenges and maybe help think through some of the solutions.
That's very cool. And I love that project because that's like almost consulting-esque work inside of investment banking, which
Yeah,
is really
that's right.
cool.
Yeah, yeah.
But okay, so synthesize that for me. Pitch it to me in terms of like this major and like studying engineering. So I'm just gonna ask a provocative question here. Why is civil engineering the best investment banking major?
I think the role of an investment banking analyst is, of course, to carry out tasks that are given to you that are relatively straightforward. So a lot of it is, making sure you have the grit and the determination. Engineering really teaches you to do that. Oftentimes, you
Hmm.
don't have either the time to fully appreciate something, or maybe are pushed outside of your limits. But really sticking with what you're supposed to be doing and having the grit and determination to overcome difficult times is
Hmm.
tremendously helpful. I would say the analytical skill set that engineering teaches you is also great. Um,
Hmm.
Obviously, I think the beginning of your investment banking career as an analyst, you do need analytical skills, but I feel like the the senior you get, the more access to a lot of different information you get, and your job turns
Hmm.
from you know playing with the data or actually modifying the data to actually making very quick decisions on a high
Yeah.
level, very in a very swift way that helps
Hmm.
everybody in the team and making sure where your team is spending time is actually the right place to do it. So I think a combination of two, having really strong determination and grit when times are tough and when you really need to put in the hours is something that engineering really teaches you, and then being comfortable with data and numbers and finding ways to make decisions very quickly in an efficient way is also super helpful that engineering teaches you.
Hmm. Yeah, yeah, and it's so interesting to see that trajectory, and I've seen that in my own career personally, where it's like the decision making timeline has gotten shorter and shorter, and the scope of those decisions has gotten larger and larger the more senior I get in
Yeah,
my career.
absolutely.
And unless you're able to like build that pattern matching, you're just not gonna have time. You're just not gonna have time to like make the decisions effectively. Like you just need to be able to understand what should look like so that you're able to like make the decisions in a time frame that's reasonable. So
Yeah.
that's super interesting. So, note to everyone here: this is potentially the best unlock for investment banking is some sort of engineering major. Although I personally studied finance, and I thought that was helpful too. But sometimes I think, okay, you can learn the finance on the job, so why not go study something else a little bit more fun? But okay, so you've been humble up to this point because you're like, oh, I might do investment banking, and then you go waltz your way into like perhaps one of the best elite boutiques in the entire world. So let's move on to chapter here two here, talking about Lazard. And so, what was your recruiting process like, and how did you stand out in one of the most competitive elite boutique interview processes in the world, Lazard?
It's definitely, I would say, a lot of, like I said, grit and determination. I recognized pretty early on that my peers had probably already done internships in their sophomore year, so I would
Hmm.
have to maybe bit more aggressive on the recruiting front and a bit more aggressive on the networking side. So I initially started, Lazar's energy team, for context, was split between Houston and New York. I started in Houston and then moved to New York within the team. It was the same team split across two different geographies. So when I was at UT Austin, I decided that every Friday I would take a bus to Houston, meet with as many people in investment banking as I could all day, and then take a bus back. And I did that every single Friday for the whole semester. Now it did mean that I was missing some classes. I was missing my mechanics of solids, which I ended up not doing great on. But I think that was a risk I was willing to take, and I think that was a cost that I was willing to pay. So just being very proactive, reaching out to everybody that I could who would have a discussion with me and asking them good, thoughtful questions was super helpful. It actually was at one of these discussions where I had a really great discussion with somebody at Lazard and really connected with him on a personal level. And he ended up being sort of a sponsor for me internally within the team and pushed for me to get a super day and an interview. So ended
Hmm.
up being extremely helpful as an effort. And yeah, once I got to the super days and once I got to the on campus recruiting for the first round interviews, I felt like from then on it was studying and being up to date with all the technicals and making sure you have a cohesive sort of story about your interest and all the other things that I'm sure you're coaching the students well with. They definitely matter a lot. But yeah, to get your foot in the door and maybe open the door a little bit, you might have to go the extra mile and maybe be a bit more aggressive when it comes to networking.
I love that. And it really does always come back to networking in my mind. It's like it's the solution for not having referrals. It's for starting too late, for being an international student. Like you had a lot going
Yeah,
against you.
yeah,
And so
exactly. Yeah,
I just have to recap, Tejas, like that is incredible. You were an international student. You missed a year of recruiting. You started as a junior, which is almost impossible to recruit for at this point. And then you skipped classes every single Friday. You failed your mechanical solids class or whatever, just so that you could go and actually network every single week. That's unheard of hustle. That's absolutely incredible. And so what advice would you give to someone who's late for investment banking recruiting, but still is determined to break in?
I would say maybe make your networking and your outreach a bit more thoughtful. So instead of outreaching with people and asking to grab just a coffee or learn more about their role, maybe try to see if they were in some, you and them share some passion for similar things. It might be like a cultural group that you both share. It might be, you went to the same school as somebody, and then finding avenues and ideally warm introductions with people that you already know who may know people at these firms is always helpful. I can imagine, especially now, investment banking, people in investment banking get a lot of inbound and it's really hard to
Yeah.
get their attention. So finding ways in which you can stand out, whether it's through a warm introduction, whether it's through, maybe asking a level of question that's one or two levels deeper and having thought through um, what the challenges they might be facing and maybe thinking about what's unique about you and where you can be helpful can be super helpful. I mean, one example could be if you're an engineer and interested in call it technology teams or technology investment banking um, or energy investment banking. I think that can be a really helpful way to make yourself stand out. So if you're late to the game, again, definitely don't lose hope. It's always possible to break in. You just have to maybe make your introduction a bit more memorable, or give the responder a reason why they should speak with you over somebody else.
Yeah. Oh, I love that. Give them a reason why they should actually want to talk with you. Because there's so much like
Yeah,
slop out there. There's crappy emails. And these days there's AI written emails, which is
yeah,
even harder to detect. And so it's like the bar just keeps getting up. It keeps getting higher
yeah,
to actually get on people's radar, get their attention, and get them to connect with you. But
yeah.
what's cool about you, Tejas, is you didn't just like succeed at the recruiting game and then just like coast. Because that's frankly what a lot of bankers do is they get into the job. They're really good at interviewing. They go recruit for private equity and then they just like chill for a couple of years. But you spent over 4 years at Lazard across New York and London, which is a very long time by investment banking standards. That's not just like the classic 2 and out analyst program. And so what made you stay that long and what did that period teach you?
Yeah, I mean, exactly right. I spent a lot longer than even I would have imagined initially, and yeah, definitely a lot longer than my peers. But to me, a lot of that was really driven by the fact that I felt I was still learning on the job, and I didn't feel a need to switch just yet. Obviously, private equity or some of the other buy side roles were what traditionally happens, and that's what the conventional wisdom was to go and pursue them. But I felt like in my role, I was learning new things constantly. So within the energy team, while my focus initially was maybe on larger scale hydrocarbon energy, so LNG, energy infrastructure, pipelines, I was able to shift my focus within the team to be more renewable energy focused. So I felt like that really opened up an entirely new sector and industry for me to learn, and I felt like before I actually properly learn it, there's no point in leaving. And when I shifted offices from New York to London, with that I shifted to more technology or growth equities focused team. I'm happy to share a bit more about that as well. But with that, I felt like it also opened up an entirely new set of industry and new set of um, information for me to learn. So
Yeah.
as long as I was constantly learning, I felt like there's no point for me to try to leave now, and I felt like I could always go and do something else eventually if I really wanted to. So it was mostly, I would say, learnings driven and being quite interested and happy in the work that I was doing more than anything else.
Gotcha. Okay. So you are a very learning driven person, which I guess makes sense if you're willing to take classes like mechanical solids or whatever that was called. Um, but also interesting to hear that you switched groups. And this is something that isn't actually super common because it's extraordinarily difficult to like do the internal networking and make that transition.
Yeah,
But not only did you switch groups, but you also switched locations. And so that was
yeah.
a double pivot. Like, how did that happen? What does that process look like on the inside?
To be fair, some of my move was out of necessity than choice. So as an international student, I had 3 years to work in the U.S. and then my
Hmm.
visa had to be renewed, but that could only be renewed if you spent a year overseas. So
Hmm.
my firm at the time, Lazard, was extremely kind and supportive, and they were willing to send me to a different office and bring me back in a year. I felt like the opportunity to live in a different city, a different country, experience something very different from what I was used to would be amazing. And when the opportunity came to move to London, I decided to not treat it as a 1 year sabbatical or 1 year secondment, but treat it as a move.
Hmm.
And yeah, I networked with a lot of teams in our London office. We didn't have an energy team per se, which made it a little difficult.
Hmm.
But by that point, I felt like there were other interesting teams that were working in different sectors that I was interested in. So I ended up joining the venture and growth team at
Hmm.
Lazard that was focused on fundraising for scale ups and startups. So working
Yeah.
with call it Series D, Series E pre-IPO companies on their fundraising. I thought that
Yeah.
was super interesting, and they were also doing some energy projects at the time. So I thought that would be a helpful way for
Hmm.
me to be a value addition to the team as well. So
Hmm.
yeah, it involved quite a bit of online networking. I didn't quite travel to London. This was also during COVID, so
Oh
it was harder
gosh.
to do that. But a lot of online interviews, and yeah, I ended up really connecting with the guys in the venture and growth team, and decided to join them.
Yeah. Okay. Well, and that's a great story also because like I've run into a lot of students who have the same thing. They've got the STEM OPT for 3 years or something like that, and then they've got to go and
Yeah,
figure out some sort of visa situation. And it's one of the unseen advantages of working for a large international bank. And Lazard's kind of
yeah,
an interesting intersection there. And as you know, I obviously spent part of my career at Lazard as well. And like basically, it's kind of a cool intersection because it's got a little bit of the internationalism and the reach of a bulge bracket, where it does have like international offices, a big
yeah,
presence in London, and things like that, but also is like a firmly U.S. bank. And so
yeah,
that's kind of a really really nice situation to have when you're facing these visa issues, is to have
yeah.
like a bank that's more flexible like that. But
Absolutely.
I'm
Yeah,
also really curious to hear about this like situation of recruiting as an international student in the first place, because visa
yeah,
issues are becoming extraordinarily difficult these days. Like, how did you
yeah.
overcome that, and like, how do you think about recruiting as an international student that needs a visa out of school?
I would say it's probably becoming more difficult now than when I was recruiting. But that said,
Hmm.
it wasn't easy ever. There were definitely
Yeah.
firms that just point blank refused to hire international students, and I understand
Hmm.
that there are a lot of challenges the firms need to navigate as well. I quickly figured out which were the firms that would sponsor international students and only focus on those, only recruit with those, and Lazard happened to
Hmm.
be one of them. Um, I would say the
How'd you
other
figure that
thing
out, by the
to
way?
keep in mind.
Did you network, or were there databases or something?
I mostly found out through networking. So I essentially just asked them, not the very first discussion. I
Hmm.
think it feels a little desperate when you ask that very initial on. But once you get to know them, maybe over coffee, ask them if there are other international students working there or if they've
Hmm.
any information about the firm sponsoring. I would say, maybe going back to what you just mentioned, is that you would be surprised how many of the large investment banks, even the boutiques, have very strong presence overseas outside of New York and San
Hmm.
Francisco and some of the other regional locations. And they actually are very strong in a lot of parts of the world. And if you're an international student, yes, absolutely, focusing on firms that have global presence is extremely helpful. You should definitely focus on those and maybe prioritize those over the others. And if
Hmm.
you're ever in my shoes when you have to think about switching to a different location, I would say it's also an incredible opportunity to do investment banking in other regions of the world and really see how finance and banking works in
Yeah.
different parts of the world. So treat it as an amazing opportunity you've been given than a hurdle that you have to overcome.
That's such a good mindset shift, and frankly, I actually sought out an internship a couple summers ago in London specifically for that reason, just to like explore and learn, and it's a
Yeah.
ton of fun. Like New York and San
Yeah, it's
Francisco, they're
amazing. Yeah.
great. Like there's a lot of center of gravity in finance, but
Yeah.
they're by no means the only places. And in fact, it's a little bit egocentric sometimes
Yeah.
when you go to London. And you're like, it thinks it's the center of gravity, and you probably go to like Shanghai's financial center, and
Yeah.
it probably thinks it's the center of gravity, and so
Yeah.
there's a lot
Yeah.
of fun places to
I
be there.
definitely
Very
have
interesting.
friends who started, in investment banking with me and were from different parts of the world. And a really good friend of mine, who's Indonesian, he had a similar situation and had to move out. And his firm very helpfully sent him to Singapore, and he's loving it so much he decided to stay there, get married to a Singaporean, become a resident, and yeah, he's really really enjoying his time there. So think of finance, I would say, as a global industry that has applicability for your skills really everywhere, and don't just be limited to San Francisco and New York.
Yeah, yeah, absolutely. Well, very cool. So, I want to just briefly talk about the fundraising and like venture growth and investing type of banking versus M&A. So, what is the difference between fundraising investment banking, where you're helping startups like raise capital, and like more traditional M&A, large scale ECM, DCM, that sort of stuff?
Yeah, so I would say there are a few primary differences. Number one is the job of an analyst or even an associate for that matter. I think in fundraising teams is actually quite different from the job of an analyst in an M&A team. The way fundraising teams work is that they're sector agnostic, so
Mhm.
they don't specialize in a specific industry or
Yes.
sector. They specialize in product. The product is fundraising or
Mhm.
capital raising. What they end up doing is they partner with different teams within the firm. So in our instance, we would partner with, call it the energy team out of New York, or the tech
Mhm.
TMT team out of San Francisco, or consumer team in London, and approach companies that were tech companies and tech startups, scale ups within those spaces, and
Mhm.
help them fundraise. So the job of an analyst and an associate is fairly different. You would get less financial modeling exposure and maybe a bit more product exposure and understanding how investors think. So in some ways, it can be super helpful to see maybe up close how investors are evaluating a business, what types of questions the investors are asking. But also at the same time, I think it can be a bit limiting in that you're not getting as much financial modeling exposure, which I think is one of the big reasons to join an investment
Mhm.
banking analyst
Yeah.
program. So it comes with its pros and cons, but I think overall, for me, it was quite an additive experience.
Yeah, for sure. Okay, that's very interesting, and especially once you already had the base in the modeling, like there's diminishing marginal returns to like being able to build a DCF. Once you can build a DCF, you can
Yeah,
kind of build a
exactly.
DCF, and so that might have been
Exactly.
a very interesting and good experience after a couple of years of that traditional investment banking analyst experience. But talk to me about Lazard. So Lazard is such an interesting firm. It's been around since like what the 18th century or even a little bit before. I'm
Yeah,
not
I think
sure. It started as like a merchant bank or something. I read a massive biography at one point, but it's got a bit of a reputation because it's been around for so long. It's like this storied European bank, and it's known for intensity and rigor and like doing incredible deals incredibly well. So that's part of why I'm so excited to talk today is because like you've seen that for the inside. And so, talk to me.
yeah.
What did good actually look like at the inside of Lazard?
Definitely agree. It's an intense place. I think the standards at Lazard are extremely high. I'm sure standards are high across Wall Street, but I think especially at Lazard, you are expected to be on your A game almost every single day, if not every single day. So it can be anything as small as making sure you're using the right voice in the sentences that you put on a pitch deck, making
Yeah.
sure your punctuation is absolutely perfect, to even the financial models and how you interact with the management. All of it is watched and observed and trained on very carefully. So I think
Mhm.
it definitely has a bit of a reputation. Now I think the reputation of being maybe too intense is a bit undeserved. I think people are still really nice and super fun there. I've made some amazing lifelong friends who are still at Lazard or have been at Lazard, so extremely grateful for that opportunity. I do think a firm like Lazard, you mentioned earlier in the discussion, but I think a firm like Lazard that has global reach and is strong across various geographies also presents opportunities for, I think, for analysts particularly, where you can get to do cross-border M&A. I think that is super fun. super interesting, and I think something that can help you stand out when you think about private equity internships or recruiting, or maybe hedge fund recruiting or what have you. I think having a differentiated experience where you've seen a non-traditional type of transaction is always helpful. So yeah, I think a firm like that can be super, super helpful in helping you get there as well.
Yeah, well, and I think that that makes sense. You're saying intense, but still people are like approachable, friendly, and to some extent,
Yeah,
um,
absolutely.
and I think that that's an incredible mix. And you probably learned a ton in those 4 years trying to get to be to that A game. Because something I've noticed is that the more I push myself to be at my A game, the more that starts to feel like my B game. And the more I can like reach new frontiers of expectations, and that's
Yeah,
necessary in finance careers
absolutely.
because the expectations do accelerate. Like you can't just like do the
Yeah,
same incredible analyst work that you did as an associate and as a VP and things like
yeah.
that just because the expectations are shifting as you're mastering the thing that you're supposed to be doing. And so as you got through this and you're spending several years, like you came from this non-traditional background where you started late, you were an international student, you were studying civil engineering. Like, was there a moment where you actually ever felt that shift? Like a single moment where you were like, hey, I'm not just surviving here, like I'm thriving.
Yeah, I think there were some moments I felt that. Yeah, definitely. I think it was probably still in New York when I was an associate. So after 2 years as an analyst in the energy team, I got promoted to associate. And obviously, the role changed a decent amount. Lazard, for those familiar with the energy and banking, energy and power and utilities world, will appreciate the Lazard's LCOE study, which is this, very strong report that they put out every year, which is sort of industry standard used by a lot of energy companies to make decisions. So
Break down
I was
LCOE. What's
co-author
that?
of that study. LCOE stands for the levelized cost of energy. So very
Okay,
simply,
gotcha.
what Lazard does is looks at how do you make electricity across the planet and how much does it
Hmm.
cost for solar, for wind, for nuclear, for coal. So super interesting, fascinating study. And yeah, I think when I was the co-author of that study and being able to be on these discussions and be able to have, I would say, an intellectually engaging conversations with some of the large electricity producers, not just in the U.S. but in Chile, in Spain, in Germany, in China, and really understanding the differences in how different countries are approaching energy, and feeling that I could also contribute some interesting questions to the discussion and bring something to the table was probably when I felt, yeah, this is super interesting, and I'm very, very grateful for the opportunity and feel like I'm, yeah, not just surviving, but also putting in a good effort and contributing actively to the team, which was obviously a very good feeling.
Yeah, exactly. It's like it's remarkable how much more motivated you are when you feel like you're actually doing something valuable, even if you're working the same
Absolutely,
number of
yeah.
hours. And so let's talk back to the industry level because we're about to shift to talk about your time in tech banking. And that's a
Yep.
very big shift. But before we get there, you obviously have this love for like energy and like power, energy, infrastructure. Like you were in Texas, of course, that sort of like oil runs in your veins to some extent. Um, but talk to me about how your interest in power, energy, and infrastructure shaped your long-term interest in climate and sustainability. Because those seems like totally opposites, and yet you've done kind of both in your career.
Yeah, I would say energy. Maybe I appreciated energy being an engineer a little bit more, but I think the more you start learning about energy and studying it, I think you quickly realize that it's really the foundation of every other industry, including technology. I think now is probably a great time to see that in the markets where lack of power capacity and lack of energy is really becoming the bottleneck for AI development. I think that sort of puts it into perspective that even technology or AI is essentially built on the foundation of energy, and everything in between, call it industrials, call it automotive, or everything else, essentially is a derivative of energy ultimately. So it was quite different from technology. The tech banking that I did, I think, was also very helpful in my now my current role, and being able to see energy and technology, I think, made me a very good, I would say, a very good candidate, and hopefully bringing in a very differentiated perspective to now my roles where I'm investing in companies that are at the intersection of the two. So energy tech companies or climate tech companies, that are really fundamentally solving a technology problem but have to operate within the constraints of energy. I think having appreciated both of them and worked in both of the different types of groups is super helpful in this role.
Okay, okay. So that's fascinating. I can't wait to talk about your time at Pearl Weinberg and tech and on to energy. But I have to ask about this because you're saying that energy is the bottleneck of AI. What in the world does that mean? And like,
Yeah,
why is that
absolutely.
true?
I, yeah, I think, I mean, we're now getting to a point where the only thing limiting more compute capacity, it's not it's not the chips, it's not the memory, it's really the availability of energy, especially in the United States and to some extent in Europe as well. We've run out of energy essentially, and we have to build a tremendous amount of new energy without really putting pressure on the grid, which is a massive challenge on its own.
Hmm.
We have to go from, call it, I think, 1 terawatt hour to 2 terawatt hour in the US, to get to a point where
Wow.
we can actually meet these data center capex requirements. Whereas some of the other countries like China is a great example where they're already at 2 terawatt, going to 8 terawatt in the next 5 years.
Wow.
So the race for AI is really fundamentally, in my view, a race to build more energy.
Wow. Okay, so that brings it to a very national security perspective where you're saying the US is at 1 terawatt hour of energy. It's able to train so many models based off of that. China is going from 2 to 8, which is
Yeah,
unbelievably massive shift and
yeah.
like a huge delta. And so, like, is the US going to lose the AI war because we can't master our energy production?
It's definitely a possibility. I think the U.S. has shown, their support across every single sector, support from policy level, support from capital markets, support from entrepreneurs to try to solve this issue. We're seeing really a resurgence in nuclear energy, which I would not have believed 2 years ago. If you had told me that the public sentiment on nuclear energy would completely change, I would not have believed that. So seems like things are definitely getting in motion, and people are a lot more
Mhm.
open to solving the energy challenge now. But I think, yeah, it's definitely a real possibility that the U.S. falls behind China when it comes to energy, and that ultimately means that there's not enough energy to run the extremely energy intensive computation that we need to run to be able to build better and better AI models.
Fascinating. Okay, well, that's a whole other wormhole we could go into, but I do have to hear about the highly related topic of tech banking. And so you shifted to Perel Weinberg after Lazard, which is, it's just looking at your resume as like a star-studded, sort of glitzy, glamorous diamond ring after diamond ring. Because Perel Weinberg is one of the best elite boutiques in the world as well. I coach a lot of students that would like absolutely die to get into Perel Weinberg. And so, what drove the shift? And tell me a little bit about both the bank shift and the industry shift.
Yeah, so I think, like I said, at the time I was in the venture and growth group at Lazard in London. I was really enjoying it. Absolutely loved the team. Was learning a ton. But at some point, I realized that I've learned quite a bit about the way fundraising works in later stage scale ups, but I don't really have a strong financial modeling skill set specific to technology. So I'd obviously done a lot of hard, technicals and financial modeling for energy. I realized that in tech, actually, modeling is fairly different, and the way you approach
Mhm.
valuation, the way you approach companies is actually extremely different. You go from valuing dividends to valuing, revenues and valuing daily active users, and completely different set of metrics, which also means fairly different financial modeling. I knew that from a long-term career perspective, being able to have a strong technical skill set in technology as well as in what I already knew would be extremely helpful. So that was probably the biggest driver for me to try to seek out a traditional TMT team, where I can get involved with some M&A, get involved with some other types of engagements, where I could, where I could learn a lot more about the way technology companies are modeled, the way investors look at these companies, the way you should think about these companies, even from an operator perspective. So that was probably the biggest reason. And yeah, I decided to join Perla Weinberg's tech team here in London. Ended up really, really enjoying it as well. Definitely helped me complete the skill set, if you like, um, from what I felt was missing. In terms of comparing the two firms, I think I'd say more similar than different.
Mhm.
Obviously, every firm is different to some extent, but I think, yeah, Lazard and Perella Weinberg are two amazing, boutique investment banks and operate fairly similarly. Now, Perella is a smaller institution in terms of number of people, so it means maybe a bit more. Lazard had maybe a bit more resources that could be shared across different teams, and Perella didn't have the luxury of that. but it also meant that Perella was a lot more risk taking in the engagements that they sought out. So,
Interesting.
you know, Perella decided fairly quickly into the whole restructuring of the crypto industry wave that they
Mm,
had an expertise in cryptocurrencies and would like to be engaged in these transactions. So
mhm.
we ended up actually pitching to a lot of technology companies that operated in the crypto industry, and we ended up being the advisors to FTX on its Chapter 11 bankruptcy, which was a project I got to work on quite a bit for 6 months. And yeah, it ended up being a fascinating mandate. And yeah, I have a lot of battle scars and a lot of super interesting stories to tell from that time. But yeah, overall, it was probably the two firms are maybe more similar than different.
Yeah. Okay. Well, I have to ask about that now. I like obviously keep confidentiality as needed, but tell me a little bit about some of those battle
Yeah,
scars, the wounds. Like, what was the FTX bankruptcy like?
it was. I mean, there's a lot in the public space, so I don't think I'm saying anything that's not out there. But I think it was an incredibly messy situation where FTX was, not only operating an exchange but also trading through Alameda. And what my team's role was essentially untangling the web of investments that FTX had made. So they'd made, I think, if I remember correctly, more than 150 venture investments into companies, ranging anywhere from seed rounds or pre-seed rounds, all the way to fairly large companies. To give you an example, they were the first institutional check, if you can call it that, in Anthropic. At the
Hmm.
time
Wow.
when we were untangling this mess, we realized Anthropic was obviously going to be an amazing business, but we
Hmm.
couldn't continue holding our position in it because of all the challenges that it created. So yeah, it was interesting in that we found ourselves in an extremely messy situation, extremely litigious situation. We were getting, as advisors to the estate of FTX, we were getting legal threats all the time. The companies we had invested money in refused to speak to us, even though we
Wow.
were technically had information rights. So ended up being a great lesson in how to navigate incredibly difficult, you know, corporate situations where the incentives are extremely misaligned, when people are
Hmm.
really being pushed to their limits, when you really don't know. There's no playbook for what you're doing, and we had never seen a company like this go through Chapter 11 bankruptcy. So it brought a
Hmm.
lot of interesting challenges, but also some amazing learnings.
Yeah. Yeah. No playbook, like you said. That's crazy. Like you as an
Yeah,
analyst at the investment bank are doing something that like nobody's really done before, which is kind of an exhilarating feeling as a financier to be right in the center of that action, even if it's litigious and nasty in a lot of ways too. Um, so fascinating. I'm sure that that was like an incredible experience. Probably gave you a few more gray hairs than you'd like. Uh, but I also have to hear, what was this lateral process like? Not many people lateral once they make it to the sort of associate or like mid-level
yeah.
associate levels. Like, how did that work?
To be fair, it was fairly straightforward. I was approached by a headhunter who was recruiting on behalf of Perella, and then I would just go and meet with people in the new team, and had a few rounds of interviews. No technicals. I think once you're an associate, particularly if you're lateraling, I think it's fairly rare to see a technical interview.
Interesting.
Maybe you might get a few questions in one of your interviews, but it's mostly understanding the motivation behind it, understanding your longer term plan. So yeah, for me, it was relatively straightforward in that I went through a headhunter and just met with the new team.
Yeah. Well, and I guess that's a testament to the credibility that investment banking gives you. Like the fact that people are willing to say, okay, like here's a Lazard analyst and associate who did 3 or 4 years or something like that. Like obviously you're going to know how to build a DCF. Obviously you're going to know what like depreciation looks like on the cash flows and how to calculate enterprise value and fully diluted enterprise value and equity value and convertible bonds and things like that. And so it's this incredible like thing that you've got on your resume for the rest of your life where people are just going to trust you a little bit more because you've got that. And to some extent, I sort of think about it like going to grad school. Like, yeah, grad school is great and it's necessary, and a lot of people do both. But you've got this like a stamp of approval saying, hey, I went to trade school. I learned these things. I know these things, and people trust it. And so Pearl Weinberg then is going to go say, okay, like he's been certified as like a Lazard graduate almost, which is a
Yeah,
pretty
absolutely.
incredible,
Yeah.
a pretty incredible credential to carry
Yeah.
with you. And so, and it's also interesting to contrast that with the private equity associate recruiting process because those are extraordinarily technical. Even when you lateral, where you're
Yeah.
doing modeling tests and you're answering technicals constantly. And so, I'm a little surprised to hear that, but I guess it makes sense to some extent as well. And did people push back on the fact that you were shifting industries at all? Like, did you get a lot of questions about that?
I did get a few questions. I think this was also a different time. I think it must have been end of 21, beginning of 22, when this was a great time to be a tech investor, great time to be a tech company. So I think the appeal of learning more about technology holistically was made a lot of sense to a lot of people. So I think they got the motivation and the drive behind it fairly quickly. I did get a few questions about what would it be like switching from a firm to a potentially a competing firm.
Hmm.
Obviously, I always maintained that I was doing something fairly different from what I was doing at Lazard, which was the motivation
Hmm.
behind it. And confidentiality is something I take very seriously, and as everybody should.
Hmm.
But yeah, within those, once you operate within those restrictions and are mindful of your responsibilities to confidential information, I don't think it should really be a big problem for people to switch between firms, and it didn't end up being a big problem for me.
Hmm. Gotcha. So let's shift to the next chapter here because pretty soon after that, you ended up going into private equity. So you went from the sell side to the buy side. And so, how was that
Yep.
transition from a day to day work perspective? Was that bigger or smaller than the transition of like lateraling banks and industries?
Definitely a bigger. So yeah, I think after 5 years in investment banking, which was definitely a lot longer than I initially expected it to be, although I enjoyed all those 5 years, I felt like it was about time when I try my hand at being an investor myself. Felt like I had learned a lot through different teams and would be an interesting addition to various different teams. Got approached then by a recruiter based here in London, who was hiring for a firm called Verdane, which is a broader, I would say, technology-oriented private equity firm, invested in anything from industrial software tech, to consumer technologies, or really digital consumer D2C types of businesses. So fairly broad mandate. I felt like it resonated quite well, especially the new team that they had added, which would also be looking at companies maybe a bit more in the energy side or energy transition side. I felt like having a broader mandate, but still the optionality and an opportunity to invest in a theme that I know well, which was energy, would be super interesting. Um, I would say when it comes to the shift and transition, it was maybe in my case probably a bit different in that most of your students, or most of my peers even, switched from investment banking to private equity when they were analysts and went to become associates at private equity firms. I went from being an associate in investment banking to being essentially a VP. We called it a director, but essentially being a VP in private equity.
Yeah.
It meant, obviously, it was a great opportunity that I was coming in at a higher level, but it also meant that I had kind of skipped the associate years, and it meant that I had to very quickly ramp up in the way investing works. You always hear about it and you interact with investors in investment banking, but never quite actually know how to navigate those scenarios. And
Yeah.
until and unless I think you've been there and gotten your hands dirty, it's very difficult to appreciate some of the challenges that can be. So it meant getting up to speed very quickly, pushing myself on learning some of the things that I felt like I had missed. So it wasn't something that I was not accustomed to. So I felt like I had to redo some of the catching up again, which I was quite happy with, and yeah, I ended up really enjoying that experience as well.
Hmm. So, what were some of those gaps? Like, obviously, investment banking gives you a wide ranging, very finance focused skill set, but what were you missing when you went over to the buy side?
I think one big thing I was missing was you produce a lot of output and a lot of work in investment banking, but especially as an analyst, you don't get to take a step back and think about what you've just produced in the context of the broader work, or the
Hmm.
context of the broader question at hand. And investment, being especially in private equity, obviously you have to produce a lot of output, but everything has to have a so what, or everything has to have
Yep.
a purpose. So going from creating a lot of slides or a lot of models to being in a position where creating new content wasn't the goal. Creating as little as possible while conveying the point with evidence was the purpose. That was definitely a mind shift. I also think in investment banking, you get handed a lot of tasks. So somebody's delegating tasks to you, or somebody's watching over you, somebody's sort of checking your work all the time. In private equity, particularly, you really have to be self-motivated and make sure that you are thinking about the next two steps, three steps down the line, and make sure that you're proactively doing those as you go along. So that was definitely a big mind shift that I had to push myself to adopt. I did. I would say it's not a trivial mindset shift. So definitely, students, when they're thinking about what would it be like to go from investment banking into private equity, obviously there are a lot of great things about it, but definitely expect to push yourself even more. It's not like you can go there and coast, and once you're in private equity, you're in the promised land and happily ever after. You will
Yeah.
constantly have to be on your A game. So
Yep.
hopefully the habit you get into on be to be in your A game in investment banking can be continued to maintain that A game once you get to private equity.
Yeah, yeah, because it's a pyramid. Like it's always getting harder. The bar is always rising and stuff. And so
Yeah,
it's finance is one of those industries where if you're complacent, you're failing. If you stay stagnant, like you're
yeah,
falling behind peers that are increasing, and you're going to get cut at the next cycle. It's
yeah,
sort of like a race or something like that, where the last few players are continually weeded out, and it's just you're left with the very very top people by the time you make it beyond. Um, so
yeah.
that's it's stressful, but very interesting. It's a generative process, and for someone like you who loves learning so much, also very interesting. Now, something else that's extraordinarily uncommon here, and I don't think we highlighted this enough, is going into private equity as a VP, like VP equivalent or whatever you call it. That's uncommon.
Yeah.
Almost everyone goes into private equity as an associate. Even if they go and like make it to the VP level, often they'll take a step backwards and either be like associate or senior associate instead of make it to the vice president level. And so, what was your recruiting strategy, and how did you make that happen? That's really impressive.
It was, to be fair, it was more of a function of what the firm was
Hmm.
looking for at the time. They had fairly strong set of associates and also directors and MDs, and really were missing some people
Hmm.
who had led teams or who had been in situations where they were responsible for driving execution, and
Hmm.
felt like my experience fit into that quite well. So it wasn't something that I sought out, to be honest. I think if I were to leave investment banking then and also join a firm as a senior associate, I probably would have been completely okay with it. It ended up being something that the firm was really looking for at the time, and my experience fit in quite well.
Hmm.
Yeah, just a great opportunity that I responded to.
Yeah. Okay. Interesting. And so, tell me a little bit about how you ended up at Verdun specifically. Like, what's the strategy and what drew you to that?
Yeah. So to tell you a bit more about Verdane, Verdane is a broader private equity fund based initially out of Norway and Sweden, but then expanded to London and now more countries in Europe as well. So the mandate was pan-European, technology-oriented businesses. So anywhere from, like I said, anywhere from D2C businesses to software, which was one of the main strategies, to also some companies in energy transition. One of the things that Verdane was extremely well known for was also the secondary strategy and
Hmm.
portfolio deal. So instead of just buying an entire company, they would come in and approach call it a private equity fund or a venture capital fund that had a few companies left in their portfolio.
Hmm.
If the fund is already nearing the end of the fund cycle, instead of the fund having to struggle to fire sale these companies, they could sell it to Verdane, obviously at a discount, and Verdane could have really interesting entry point into some of these fascinating companies that were good companies, but for whatever reason couldn't be sold or did not want to be sold at that time. So super interesting and creative mandate, I would say broadly. My role span anywhere from working with a maritime technology and software business to investing in some solar companies that had a software angle to them. So fairly broad and you know fairly creative as a mandate, but more, I would say, focus a bit more on Northern Europe, so Scandinavia, England, some in Germany, maybe a few instances outside as well. Like we had a deal in Portugal. We were looking at something in Spain, so fairly broad, but yeah, it ended up being a really really amazing experience.
Gotcha. Okay. So you're saying that Verdane, they had this like incredible geographic niche as well, but they also have this strategy niche in terms of working specifically with secondaries and like continuation vehicles potentially for
That's right.
for
Yeah,
specific assets within funds. And so tell us a little bit more about that because secondaries is like absolutely popping in 2025. I think that was like probably the biggest year by like a landslide in terms of like volume and stuff like that. And so
Yeah.
I'd love to hear your thoughts on the industry, given that you've worked so directly within it, and like what the secondary strategy looks like for private equity in 2026.
Definitely. So, and it's a strategy that's been around for a long time. Now is definitely a time when I think if you're a secondaries buyer with the dry powder and the mandate to be flexible, you can have some amazing transactions and actually come into amazing businesses at fairly good valuation. Obviously,
Hmm.
your listeners will be well aware about the challenges in private equity, where there's a lot of dry powder on one side, a lot of companies willing to be transacted in the middle, but on the other side, really the machine is not churning as it used to, and there are not as many transactions as there used to be. So what that means for limited partners is that liquidity is really dried up. That means that companies or firms that traditionally would exit a lot of businesses are having a tough time creating exit opportunities and getting liquidity back to their LPs. So they're being a lot more flexible and a lot more open to different types of creative solutions. Secondaries is obviously one great solution for that. We've seen anywhere from continuation vehicles, which is I think last year was the highest there has ever been, to a lot of funds being raised primarily to invest in secondary. So our strategy was fairly flexible in that. We approached some companies where it was an individual company that we would want to acquire or acquire either a minority or majority. We also did transactions where we would approach a venture capital fund or a private equity fund and buy a portfolio of their assets. So
Hmm.
maybe buying three or four companies
Yeah.
all in one transaction. It did mean I think it does add a lot of complexity from a financial modeling perspective and thinking through how a transaction can be structured. But it's something that I think the more complexity there is, I often think that there's more alpha to be had and more returns
Yeah.
to be made. The more complexity. So if you do it right, you can obviously end up having some amazing outcomes.
I love that. And that's a good little sound bite there is complexity equals alpha. And the reason behind that I think that's so true is just because realistically, the people behind these deals are just people. Like they're just people like you and me that are
Yep.
like smart and scrappy and stuff like that. But given the choice between building a 12-hour financial model and a 3-hour financial model, we'd probably prefer to build the 3-hour financial model so we can get on and do other things with our day. And so when there's that complexity, it scares a lot of people off, like implicitly or explicitly. And a lot of people just don't have the capabilities to actually wrap their heads around what these transactions and processes look like. And therefore, there's more mispricing in the market and more opportunity. Um, and so, do you ever work on any like crazy, complicated transactions or something like that?
There were some really creative ones that we worked on. One that comes to mind was a company called Meltwater that was publicly listed in Oslo.
Mm-hmm.
You know, a lot of the it was owned by a big portion of the interest was owned by private equity firms based in the U.S., but also some of it was owned by the founder's still family office. So we approached the family office in, I believe it was in 2023, and essentially decided that we would be extremely keen. I think it was maybe 2024. We would be keen in taking the company private, but the way we would do it is that we would invest, we would take stake in the company, not directly from the public markets, but through the founder's family office. So it ended up being a fairly complicated transaction in that we were acquiring secondary stake from a family office that owned some of the shares. All the while, we also had to coordinate with other private equity firms who were also going to take it private. So aligning
Wow.
interests and making sure that we're all working towards the same goal was quite complex. It ended up being a really good transaction. The company got taken private. The last I heard, they're doing quite well. I think it's a really interesting tool and product. So it definitely made sense for it to be in the private hands than public markets. I think
Mm-hmm.
for technology public markets in Norway, liquidity is not nearly what it should be for businesses like this. So hopefully the company, once it goes through some of the work that it needs to go through, can be back on the public markets again.
That's very cool. And my head's spinning just thinking about the different payout models and waterfalls you probably had to build to make that math work effectively. Um, But another thing I want to touch on before we move to your most recent position, talk about that chapter, is how you shifted to an investor mindset because you built several years in investment banking, which is explicitly selling deals, doing deals, executing on transactions.
Yeah.
And honestly, a lot of the times it's less about whether it's a good deal than if it's a deal that can be done and you can get those fees just because the incentives are a little different. And so, how did you shift to an investor mindset? And specifically, like, how did you think about investing in tech specifically?
The You're exactly right. I think the incentives are very different, and that does trickle down to the way you think about the companies and way you approach businesses as well. In investment banking, your role is really to make a transaction happen. You don't always pay as much attention on whether the transaction is the best transaction to be doing for the investors. Obviously, as good investment bankers, I think you have to align your interests also with the client and make sure you're
Hmm.
advising on transactions that do make sense. But I think seeing the accountability and responsibility to make a good transaction on paper actually a great transaction in practice is quite high. Um, I think that's definitely a mindset people have to go through. In my case, I think maybe being a bit more critical of what I was thinking through and the outcomes that I was suggesting or the way I was valuing a business. It went from something as simple as taking the comps output and then applying that multiple to this business to really questioning every single comp on the table, questioning why this transaction makes sense as a comparable transaction, why this publicly traded company actually makes sense as a publicly traded peer, and really digging down deeper into every single thing that went into your analysis to generate a financial model is definitely a mindset. You don't take inputs as a given. You really question every single input and make sure that the answer you're getting at the end of the day is something that you can stand behind and that you fully believe in.
Yeah, I love that. And at the end of the day, because your job is on the line, your head is on the line for these transactions, your carry is on the line.
Yeah,
That's going to be more
yeah,
natural. And it's for better or for worse. It's like it's a pretty intense industry where I've had friends,
yeah,
colleagues that have been really good investors. They did one bad deal and they were fired. Like that's just kind of how it works sometimes. And
yeah,
so it really does force you again to bring that A game. Like that's the theme that we keep coming back to here is like finance requires a lot of you. It gives a lot to you, but it requires a lot from you as well. And so
yeah,
with that,
absolutely.
I want to hear about the last and latest chapter in the career, which is you've worked your way up again from VP to principal at Bloom Equity. And you've been
Yeah,
focused on technology investments, but this time with a positive climate impact, which I find so funny to see this trend of energy like emerging again and again in so many different forms in your career. In the engineering degree that you got as an undergrad, into the banking, power, energy, and industries, and then now with the climate side of things. And so, what drew you specifically to the intersection of finance and climate?
yeah, exactly. I think you've known me for a while, and you probably you've seen me be passionate about sustainability and the impact you know climate technologies can have on our planet. I felt like I was really enjoying my role in private equity.
Hmm.
Again, this was not something that I was actively seeking out, but when I heard about a new firm called Bloom Equity, which is going to be a growth equity firm focused on making investments in technology companies, but with a clear climate impact angle, I felt like that resonated a lot with the way I've thought about using my skill set in the long term. It resonated a lot with what I thought was also super exciting space at the time. Climate, we hear a lot about climate tech broadly, but there's really no real way to define it except companies that have a climate impact. And that can look very different. It can look like a company that's creating green hydrogen. It can look like a software business that's supporting better solar build out and anything in between. So it felt like a great opportunity with a very clear mandate. Our firm was quite focused on making sure that we invest in technology companies first and not climate companies first. So making sure that the returns we promise to our LPs, who are traditional LPs, like they would invest in any other fund, we really deliver on that. So being able to deliver both returns and impact at the same time, obviously it's a challenge. I think particularly over the last few months, it's come under a lot of pressure. Sustainability broadly seems like a theme that may be being put on the side for a bit or being deprioritized for a bit. But I think, yeah, obviously in the long run, it's a theme that's going to be extremely relevant. It's a theme that we need to invest behind. and I felt like being able to use my skill set to help support a team that was doing that felt like an amazing opportunity. And it's also a newer firm, so we're still investing out of our first fund, which meant a lot more responsibilities for me, a lot more freedom to go seek out my own transactions, go meet management teams on my own, create deal flow really on my own, and then also execute everything on my own. Felt like I would step up into a lot more hands-on experience, step up into a role that meant maybe pushing myself a bit, a bit further from what I was used to doing, and not having all the resources and support that I used to, but still being in a position where I really get to dictate where I spend my time and meaningfully contributing to the firm's progress. So felt like an amazing opportunity. Really enjoyed meeting the team. Really liked the mandate we were investing behind, and yeah, decided to join. And it's been a really fascinating year and a half, call it. I've done a few transactions, a few more in the works. So hopefully
That's
we can
great.
announce a few more. But I've also seen the space evolve a lot. Like climate tech has gone through a lot of evolution in the last 18 months as well. So super
Mhm.
interesting time to be investing in this space.
Yeah, well, tell us a little bit more about that. Like, what's happened in climate tech recently?
A lot has happened from a policy perspective. Maybe not as much has happened from a fundraising or technology perspective. Not as
Hmm.
much has changed. A lot has changed definitely from the governments and capital.
Hmm.
A lot of capital that used to back and invest climate dedicated businesses, climate dedicated funds, now has found other priorities. What that means for us in Europe is that national security and defense is a lot more pertinent theme at the moment, a lot more
Yeah.
important theme to back and invest behind, and I completely understand. So it's definitely been a bit more challenging as an environment for fundraising. We've been lucky in that we managed to meet our
Hmm.
target and close our fundraising. But overall, yeah, it's definitely been a broader challenge from a fundraising perspective. Maybe
Hmm.
in the US, companies feel a little bit more the narrative of climate and energy transition being an incredibly high priority to now. I think national security, defense, a lot more other themes becoming a lot more important is quite palpable. Some of it is politics, some of it is economics. It's really hard to predict cycles like this. So from that perspective, I think the end environment or the broader context in which we operate has changed quite a bit. From a company's perspective, I think not too much has changed. We continue to see businesses that are doing amazing things, bringing great technology to the market, really experimenting with amazing new ideas and making tangible impact continues to be, the pipeline continues to be as strong as ever.
Hmm.
I think now, I alluded to this before, but with AI, I think there's maybe an opportunity for companies operating even within energy tech to be mission critical for AI development.
Mm.
We've
Yeah.
seen that theme play out quite a bit. So different angles and different ways to see a company, but I think broadly the desire from entrepreneurs to create something that has a positive net impact is stronger than ever before. So we're quite
Hmm.
happy to see that ongoing.
Yeah, I love that sentiment, and I think that's the piece that's staying constant here is people care about making the world a better place and not just doing business for the sake of doing business and doing finance for
Yeah.
the sake of doing finance, but really about improving things. But it's particularly hard right now because, as you're saying, there's a lot of like regulatory pressures and other focuses politically that are driving attention away from climate and sustainability. Um, and broadly speaking, private equity is very much under pressure, where the saying is right now a flat fundraise is the new up fundraise, and a down fundraise is the old flat fundraise.
Yeah.
And so it really is very, very
Yeah.
hard. And especially when you get the converging political factors of climate and also the private equity factors, it's probably creating a lot of pressure. And something that climate and sustainability
Yeah.
specifically gets knocked at that I'm sure you hear about all the time is just this idea that it's more about impact than outcomes. And so you said though explicitly that that's not the case. That you're focused on the returns, and then the climate is like a necessary must-have as well. And so how do you stay rigorous about that while still saying mission-driven? And how do you balance the growth and the defensibility and the real-world impact of the businesses that you're investing in?
Yeah. I think the theme of climate and impact investing can get very complicated very quickly. Everybody views these types of mandates very differently. I think it's not as complicated as people make it sound. From our
Mm-hmm.
perspective, our mandate is very clear. We want to do the best possible deal, but we need to do a deal that we believe has a strong positive climate impact. So the way we approach it is we look for the best companies in themes that we like, in sectors that we like. So, for instance, we really like sectors like, technology in waste management, or technology in resource efficiency, or technology in better energy management. We really like these themes, and once we like the theme that we think has a strong climate impact potential, our job is to find the best possible deal and deliver the best possible return for our LPs. So I think, in some ways you can complicate the impact investing landscape and climate investing landscape quite a bit, but ultimately it's fairly straightforward in that you want to invest in a good deal. If you're taking a discount to your returns just because a business is climate impact, I think in the long run that's not the right thing to do for your LPs, who also have fiduciary duties to make sure that the capital that they're managing is best utilized and generates the best return. But it's also not the right thing for you to do, in that it will become increasingly harder for you to fundraise. So we have to be quite crystal clear in that we need to back businesses that we think fundamentally make sense, are fundamentally good businesses, but we just narrow our scope to only investing in those businesses where we see positive climate impact.
Gotcha. So you've got an opportunity set here, and you're saying you're not going outside of that opportunity set to find stuff. You're just restricting that and making your job a little bit harder in some ways, probably, but also just like narrowing that to have a clear focus on something that can be
Yeah,
both. And I'm curious,
absolutely.
as you've done that, like, are there any trends within AI infrastructure or climate tech that you're really excited about right now?
There are definitely a lot of trends. I think one big trend that we've seen play out recently is energy management for computation. So,
Hmm.
for readers who are, or for your listeners who are following the build out of AI data centers or data centers broadly, they'll be quite aware that energy is a significant portion of the OpEx for these data centers. Oftentimes, more than 50% of the OpEx is
Wow.
going towards energy. We're currently in a phase where it doesn't matter how much energy a data center consumes, it's all build, build, build. But there will come a time when energy will become the bottleneck. And at that
Hmm.
point, I think being very energy efficient and having tools that help you manage your energy and being the most energy efficient data center is going to be incredibly critical. So we've seen
Hmm.
some amazing companies that are, either software businesses or hardware enabled software businesses that are doing a great job managing energy within a data center. So observing where cooling is happening, observing where there might be waste of energy in instances, and then delivering real tangible energy reduction. So we've seen businesses that can impact, up to 20% energy consumption reduction. That's a 10% reduction in your OpEx, which can be quite material
Yeah.
for data centers that typically last 15 to 20 years. So that's a theme that I'm super interested in, backing companies that make the energy consumption for computation a bit more efficient.
Hmm.
A few other themes we think that the whole circularity and being more resource efficient. We've not seen as much technology usage when it comes to it. We've seen a lot of technology when it comes to recycling things, but we haven't seen as much usage maybe on the sorting or maybe on the collection side of it. So I think there's a lot of benefits that you can have. There's a lot of potential for it.
Yeah. Okay. Gotcha. So like waste management type things. But I
Yeah,
think given the prevalence of AI in the economy right now, it goes back to the conversation we were having earlier about like the size of the national energy budget essentially that every nation has. And so if we're able to take a terawatt of hour of American power and like use that more efficiently, then that can turn into two potentially, or like effectively, if we're able to
absolutely.
use
Yeah.
that energy more effectively. And so, what do you think are going to be the key bottlenecks in energy, though? Like going forward, is it production? Is it transmission? Is it delivery, or some other sort of technology component that we're missing?
The answer is really all the above. We're seeing significant delays in new production coming online. A big reason for that is the transmission is just not there. So obviously, production side is quite challenged. If you
Hmm.
go to call it Texas or a region in the U.S. where there's a lot of solar capacity already, to bring new solar farms online can take as long as 5 years.
Wow.
In the case of Europe, in some of the countries that I invest in, sometimes it can take almost as long as a decade. So obviously that's a
Wow.
huge problem. So not enough production or not enough of an infrastructure to bring the production online is a huge challenge. The transmission is obviously a massive challenge as well. I think particularly in the U.S., where energy resources are not exactly in the same locations where the energy consumption happens. So if you think
Yeah.
about wind and solar, there's a lot of it in West Texas, but there are not that many people in West Texas. So taking that excess electricity from these regions to city centers, or where a lot of it is being consumed, is going to be a huge challenge. Now there are a few companies that are trying to solve it, but the solution to transmission problems is just more transmission, and building a transmission line in the US is incredibly complicated. Some people are trying, and I really wish them all the best. I think that would be an amazing solution, amazing outcome, but it's a very difficult problem to solve. And
Mhm.
finally, I would say on the consumption side, there's a lot of efficiencies to still be had. I think if you look at how some of the other countries, countries like Japan approach consumption, they're just so much more efficient than we are. And that can go a really long way. Like you said, the energy budget of 1 terawatt hour can really be maybe closer to two if you implement all the solutions, if you implement better consumption, if you implement, more transmission, if you
Mhm.
implement maybe even a simplification of the new generation being added on. I think there's a lot of potential for existing resources to produce a lot more output as well.
Wow. Well, it's fascinating to hear these things, and like clearly your work in this industry has enabled you to synthesize trends in a way that a lot of people aren't able to. And so, going back and reflecting across some of the things that we've talked about, because we've talked about your career at Lazard, Pearl Weinberg, moving into investing, Verdane, and now at Bloom Equity. How do you think about the transitions between tech and climate and various different banks? Like looking back, is there anything you would change?
Is there anything I would change? Probably not, to be honest. I've been, you know, to begin with, I've been very fortunate in getting the roles that I have. It's
Mhm.
been, I think, investment banking, especially the analyst 2 years, is an amazing foundation for anybody who wants to have a career in finance. I think the skills it teaches you, the discipline it builds, the grit and the determination that it really inculcates in you is tremendous. That will be
Mhm.
tremendously beneficial throughout the course of your career. So definitely wouldn't change that. Obviously, I've had a more of a non-traditional path in switching from energy to more technology-oriented teams, and now sort of a combination of two. Maybe in hindsight, I could have probably stuck with one or the other two, but I'm incredibly happy the way my career has panned out, and it's been a lot more interesting path to getting here. It's also taught me a lot more interesting lessons along the way. It's given me life experiences that I never thought would be possible. Just also being able to work in New York and London, I would never have imagined I would be able to do that at such a young age. And yeah, being in the center of two of the greatest financial capitals in the world and learning from people from so many nationalities, so many different backgrounds has been just tremendous. So wouldn't really change any of the steps in the journey. Maybe yeah, maybe along the way I could have probably learned a few things here and there a bit more, but you could always do that. And yeah, I think you have to obviously, like you said, we keep going back to this point of making sure you're on your A game. I think in finance, people are quite focused on doing that, but sometimes we forget to take a step back and also appreciate what we have.
Yeah. Okay. Well, this has been a really fascinating career, and you tie it together with so many different diverse themes and interesting pivots and transitions. So there's just like a lot to learn here. So thank you for sharing so much of it. Now, I have a few questions I like to rapid fire finish with for everybody who comes on. And so I'm just going to hit these, and I just want to hear your honest reactions. One, two, three.
Yeah.
So first off, what's the highest ROI habit, technique, or routine that you picked up on Wall Street that you still use today?
Thinking about every investment from an NPV perspective.
What does that mean?
I think it could be something as simple as should I lease a car or should I buy a car? Making sure you're thinking about everything from an opportunity cost perspective. What's my net
Yep.
present value of different decisions? It sounds very simple, but I think it's helped me tremendously in a lot of the financial decisions that I've made.
Love that. Yeah, thinking about things in terms of opportunity cost and like true over ownership cost over time. That's great. Second, if we looked at your
Yeah.
calendar and bank or credit card statement from last month, like what would it say you actually value?
Ooh. Probably reading. I spend a lot of, I definitely spend a decent amount of money on Substacks and different news sources, and information sources. So I definitely value reading a lot. I've also
Mhm.
gotten into the habit of summarizing everything that I read into notes for myself, and that's
Mhm.
also been extremely helpful in keeping my own learnings on track.
That's very cool. I love that. And then last but not least, copying a question from the How I Built This podcast, how much of your incredible success in banking and investing has been due to hard work and skill? And how much is due to luck?
I would say maybe 75-25. 75 work and 25 luck. Obviously, there is luck. You can never control for it. You can just get yourself into better positions. But at the end of the day, I genuinely believe almost everything you want to do in life is possible through hard work. Unless it breaks the laws of physics, it should be achievable. So I think, yeah, I think that's a great lesson that I've learned pretty early on in my career, and I'll hope to continue implementing it as I go forward.
Well, the good news is getting into investment banking doesn't break the laws of thermodynamics or anything like that. And so we truly can have it be a possibility then. So, Tejas, thank you so much for coming on. Really, really enjoyed hearing about your career spanning tech, spanning climate, spanning banking, investing, and coming from such an interesting background. So, really appreciate it. And I hope you have a great rest of your day.